What's up, guys? Today I'm going to show you two trades you could have caught on Monday using the inversion fair value gap strategy. So the only thing we need is a sweep of liquidity into a 15-minute fair value gap, then inverse the gap in the opposite direction. So right here, I would need price to enter this 15-minute bearish fair value gap, and as soon as I create a bullish gap when I enter inside of it, I have a possible entry to play the reversal. And the reasoning for it is that this fair value gap right here on the 15 is telling you that the sellers are the one controlling the market and that they will be ready to sell the shares at that current price. So if you see a lot of aggressive buyers coming into this level right here where you expect sellers to step in, then you have a possible area where the buyers could get squeezed, so you have a nice short opportunity. So this is really the reasoning behind it. So now let's take a look at the trade you could have caught. You see right here, 15-minute bearish fair value gap is forming, so you have sellers located right here. So you know sellers could step in easily inside of that zone. So then you scale down to the 1-minute chart, you wait for price to tap this level. And as soon as you tap it, then you want to find where aggressive buyers are located in the market, okay? And the only way to really find that is to find a time frame where the leg that entered into the fair value gap only has one fair value gap, so you can know exactly where the buyers that initiated that up move are located. So right here on the 1-minute chart, there's too many gaps here, so it's really hard for me to know where buyers are most likely to get squeezed. So right here we'll go down to the 2-minute chart, and you see right here this is a really good time frame because there's only one gap here. Okay, we just tapped that 15-minute gap right here and we created that 2-minute singular leg fair value gap. So buyers are located between this candle's high right here and this candle's low right there. So we tapped an area where we expect sellers to step in, and when we tap that gap here, the bearish fair value gap, we created a lot of displacement to the upside. A lot of buyers are aggressive here. So if we know that this fair value gap can hold and can absorb price, and then we see the squeeze, this is where I would go short, stop loss above the high, and try to target the most recent low. So right here, I will just wait for that candle to close below it. Boom. As soon as I have that, this is where I go short, stop loss just above this high right there, and I will go short, targeting that 1-to-1 risk to reward towards the most recent low. Let's take a look at what happens. And right here in 6 minutes you hit your target. So this was a really beautiful trade you could have got on Tuesday, February 25th. 15-minute fair value gap tap, 2-minute singular leg fair value gap, a bullish fair value gap created. So a lot of buyers initiated that up move towards a zone where sellers should step in to defend their position. Then the buyers got squeezed, we enter, we know they got to cover their position by clicking on sell, and then price goes down super aggressively towards the low. Alright, so this was a trade you can see right here, the 15-minute fair value gap, how we tapped it. Then let's take a look at another trade you could have caught right here. So right here, if I go all the way to the left, you can see that there is a 15-minute gap right there. Okay, still a gap in my opinion right here. So there is a fair value gap delivery towards to the left right here. So we sweep the sell side into that gap so we can recycle that gap. We're still delivering from that gap. As you can see right here, I marked out the low of the gap and the bodies are respecting the fair value gap. Wicks do the damage, body tells the story. So right here, if we sweep sell side and the bodies close back inside the range of the fair value gap, it means that we're still delivering from bullish PD raise and we should remain bullish. Okay, so right here, let's just see. So this is the sell side. If we can sweep this low and start to push up, this is where I will find a possible trade. So right here, I'll go down to the 1-minute chart. I just went short here, let's say, and took out my profit, so I had a possible long opportunity right after. Okay, and right here, you see I tap this gap and then I start to push up. And right here, do I see any gaps here on the 1-minute chart? No, I don't see any gaps here on that 1-minute chart. I only see a gap right there, okay, on the 2 minute. And as you can see right here, there is one leg that has only one gap. So this is the leg that I want to use in order to know where my sellers are located. So we just tapped the zone where we knew that buyers would be would be willing to buy price at this area. Okay, so the 15-minute bullish fair value gap. And then if we can locate aggressive sellers entering into that zone, this is when we can play the squeeze here. So the sellers are located between this candle's low, this candle's high right here. So if I get a closure above this level, I will then go long, targeting that 1-to-1. So right here, as soon as I got that, boom, this is where I go long, stop loss just below this low, and I try to target a 1-to-1 for the most recent high. Boom. And as you can see, in a few minutes again, you hit your target, okay? And then there was another really good play. So right here, you created a 15-minute bullish fair value gap. All right, 15-minute bullish fair value gap. So right here, you know that the buyers are the one controlling the market and that they're being aggressive. So right now we're looking at what is the reaction, what is the possible reaction when we enter this gap. Are we entering this gap aggressively, creating a bearish fair value gap, and we can see that sellers want to push price down below this level, in a level where buyers should be interested in buying shares here. So if we know that, if we can see that there's a lot of aggressive sellers that initiated that down move towards the 15-minute bullish fair value gap, then if we create that bearish fair value gap on the way down and we squeeze it, we inverse it, then we can play the longs. All right, so right here I go down to the 1-minute chart and you will see this is the 15-minute gap. Let's take a look at what is going to happen when we enter this gap. So right here we just entered the gap and we swept this internal low. Is there a leg that only has one fair value gap? Of course, you see this leg right here. So from a swing high to a swing low, this swing high, this swing low, is there one? So this is the leg, swing high to swing low, and this is my singular fair value gap. And what does this fair value gap tell me? It tells me that the sellers are located between this candle's low, this candle's high, and we just tapped an area where buyers should be interested in buying. Okay, so right now if I get the squeeze, boom, I enter and I try to target the most recent high for a 1-to-1. So right here on this candle, this is one of the best signatures in price, V signature, which means that we created the fair value gap with 3 candles, so 1, 2, 3 candle, the bearish ones, and the 4th candle that printed disrespected the gap. So the 4th candle after the fair value gap creation disrespected the gap, which is a clear sign of aggressiveness of the buyers, and also we had a perfect sweep of sell side right here. So this is a scenario where the gap is located at the bottom of those swing points right here, so you could definitely try to target the most recent high for more than a 1-to-1. So right here you would go long, and let's take a look at what's going to happen right after. And right here in a few minutes again you hit your target. All right, so also I have a lot of comments saying oh, this fair value gap got filled there, you did not talk about it. Most of the time if I don't talk about it, fair value gap that got filled and I did not take the trade, is because there was not a singular leg or there was not clear swing points in the market. Okay, so let's say right here, I will, even if we tapped that 15-minute, let's say here, there was a 15-minute bearish gap, as you can see. Okay, but right here, if I go down to the 1-minute chart and wait for price to tap this level, right here, as you can see, there's multiple gaps. Then if I go on the 2, there's only one gap, but there's a lack of swing points. Okay, where is the swing point? Right here. And if I go on the 3, lack of swing points. So I cannot short right here, let's say, knowing that this gap got disrespected, because I don't have a target. The target would be the most recent high or the most recent low. So right here, it's just, I can't really go short, let's say, if I don't create a swing low then a swing high with that leg, because I will use this low as being my liquidity and a little bit more. Okay, so right here what really happened was that we just had that push up, boom 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 boom, and we swept that high, and the gaps here that got created don't have any swing points. So the only thing you can really do in that case is wait for price wait for price to close below this level, then put your stop loss to break even once we hit another bullish bear rate, which is this gap. Right, so right here you would wait, let's say on the 3-minute chart, and right here, as you can see, you never closed below it on the 3. So again, like when I don't use some scenarios, it was because they were most likely not real trades. All right, so thank you guys so much. Hopefully you learned something new, or you just enjoyed this video. So see you guys in the next one. Peace out.